Welcome back. You will see, because I have completed an accounting closure, in the closures report you will see the time, or the date and time, the number of transactions that I closed, and then who did it. I'm now logged in as the admin. Okay, you can further view the real postings that I did, count of 7, and actually we have 7. Okay, you realize that they were all manual entries. They are figures, they are various accounts. Okay, so there is nothing hidden in Octopus. Now, in this video, I'm going to show you how to set up accounting rules. Okay, we've created some charts of accountant. We are going to look at some accounting rules. See, from this time onwards, we are going to be doing things on a daily basis. If you were with us during the tally class, you remember we set up the initial financial position of the company and the masters, okay, from gateway of tally. But on a day-to-day basis, we were working under transactions. So this is the same principle here. We will need to create accounting rules such that whatever event we undertake in Octopus, we will be able to apply sort of the accountant side, okay, automatically. Without that, the accountant side will not be applied. You may always have to do it manually, and you can't even do it until you've set up some accounting rules. Okay, so I'm going to open accounting rules, click add, and introduce you to a list of events, okay, that can be undertaken in Octopus. For now, I'm going to focus on all those credit rules, all those accounting rules that have credit in front of them. You scroll down and you realize that there are some that have savings. Because we haven't dealt with savings, I'll leave them for a later time. So everything credit, or most things credit, will be treated here. Okay, now a question: what if there is an event, okay, like anticipated partial repayment? In accounting, we say what accounts are affected. Okay, so we may need to debit something like operating funds and then credit good loans. Okay, now let me skip through and come to the transition of a good loan to a bad loan. Okay, so if we are writing a good loan off to make it a bad loan, what do we debit? We debit bad loan expense account and we credit the good loan property account. Okay, so things like that you may have to set them. So whatever event you select from here, you are required to specify which debit account and which credit account you will need, okay, to use. That is what we are going to do, and which currency should be applied, and other things like that. So before we can do them, if you look at this drop down, that will mean we should have created all possible accounts that we will need in advance, and that is what we are going to do now. We cannot create or set up the rules until we have created some accounts under the charts of account, and that's what we are going to do now. So I'm going to click on assets, add account, and the asset is supposed to be 10005. I'm going to call it good loans account, and that will be a debit. Save. Okay, the next one will be under expense, add. So expense is supposed to be the third. Okay, so that is the 30001. So that will be bad loans expense account, or we could just call it bad loans account. Okay, that will be a debit. Save. Okay, it was loaded under the assets, so I may need to edit that. So it's supposed to be under expense. All right. So I also have late loans. So expense, add account, expense. Sorry, late loans do not necessarily mean an expense, right? They still constitute an asset. Okay, so late loans should fall under asset. It's when they become bad that they constitute an expense because they will be written off. So late loans, that'll be 1006, and that's supposed to be a debit. Okay, please let me confirm whether I made this a debit or a credit. That's right, it's a debit. All right, another one I'm going to create is the rescheduled loan account. Okay, that will also be under asset. So since I added account to the good loans, I'm going to edit this and add account. I'm going to add new under asset 10007. Call it rescheduled loans account. That'll be a credit. The next is entry fees income. Okay, so that is income, and that should be a 4. Okay, so income 41231. So entry fees account, entry fees income account, and that's supposed to be a credit. Okay, incomes are credit accounts. All right, what else we have? Loan interest receivable. So I have predefined some accounts that I would need in my microfinance. That's why I easily can call them out. I've made a list. There's a list right here with me. Okay, so I'm going to create loan interest receivable account. So that is an asset receivable account 1, 2, 3. So loan interest receivable. I'm going to tell you when all these accounts will be needed, okay, as I create the rules. That is an asset, so a debit. Okay, loan interest receivable, and then loan interest income. Loan interest income. So incomes are the 4s. That's a credit. Okay, all right, I'm going to create a moment loan provision expense. Loan provision expense, that's an expense, and the expenses are the 3s. Okay, and expenses are debit. So when would you have to do this? You'll have to do this when you are setting up the financial system or the accounting system for the microfinance. You as the administrator would have to consult the accountant or the manager to identify some major accounts that are used. Okay, you would need these ones to set up the accounting rules that will be used for the preparation of some important statements like the balance sheet, like the income statement, like the cash flow, and others. Okay, so it's very important. Not quite, it's very, very important. All right, the next one I'm going to do is loan provision expense. Okay, I've done that. Sorry, I've done that. Loan provision expense, and then I'll also create provision for doubtful loans. That will be under liabilities. Okay, and the liabilities are the 5s. So that will be a credit. Is that? So yes, that's it. And the next one I'm going to create a moment is loans written off. So loans written off, and that will be an expense. When you write off loans, that constitute an expense, and the expenses are the threes. So that will be a debit. Okay, loans written off account, and all right. So these are the account heads that I'm going to use for now, okay, to set up my accounting rules. So I have about 8 asset accounts, 2 liability accounts, 2 income accounts, 3 expense account, and then 1 capital account. Okay, so join me under the accounting rules to set it up.